Plan. My name is Gareth Soloway and I am back with you from verifiedinvesting.com, and we're going to get into the charts today. There's actually a fair amount to discuss, even though this week is very, very light. So without further delay, you guys know me, right into the charts we go. First chart we got to look at here is the US dollar chart, and the reason this is getting my attention today is we have a potential breakdown that could confirm. I know it's hard to see here, but if you zoom in on this chart, you can see yesterday we closed below this yellow trend line. Today would be the confirming move. And again, confirmation is something very, very important that I developed. It basically tells you whether it's a fake out or a real breakdown in this scenario. And that's what I'm watching today. It's not confirmed yet. I have to wait till the end of the day. But if this confirms, this tells us that the dollar, while it will get bounces, likely is headed lower. Now, if we zoom out on this chart, I want to just show you where this is coming from. All right, if we zoom all the way out, this trend line goes back a long way. Look at this, guys, going all the way back to 2021. And essentially, it was the beginning of this bigger bull run that we saw in the dollar as the Federal Reserve was hiking rates. And so again, big move up. We've now come back down. And again, barely see it right here, but we're beginning to break to the downside. Now, short term, let's talk very short term. Those are always going to be the most accurate predictions because you're not leaving open to too many variables occurring during this period. But basically, if you look at this, there's one little level that you'll have some support at. And again, I put my trend line right there, but I'll just draw it in. Basically, this pivot low here to here through here, and then again, just kind of continues through. This gives us a short-term target of 100.83 on the Dixie, the DXY. If it breaks, and eventually, unfortunately, I do think it breaks lower, it's going down to this pivot low. And again, this pivot low is right around 99.50. So again, we're looking at a potential downside move to 99.50 on the charts based off that pivot low there. Okay, so again, there's your dollar target. Now, that's going to be very good for gold. That's going to be very good for commodities overall. And the one thing I want to say, guys, and I tweeted about this not too long ago, but basically what you're seeing here is reinflation. And I know people are going to be like, oh, but I thought it was disinflation and I thought it was deflation and all this. Well, yeah, that's what was occurring. But this is the kicker, guys. If you look at the US dollar, we have now fallen from this high up here down to here. This is about a 5.5% move down on the US dollar. And the kicker here is that now is what we call importing inflation. And so essentially what's going to happen here and what is happening is that as the dollar's value declines and we buy goods from other countries around the world and import goods, we now have to pay more money for those goods. So instead of it being $10, it might be $11 to buy that same widget that you bought from, let's say, China or somewhere else around the world. So that while the stock market likes a dropping dollar, the ultimate outcome of basically a declining currency is that it imports inflation. And go to places like Venezuela or other countries in the world, and you will see this firsthand. Now, this is a very minor example versus what has happened in many other countries, but my point is this, is that we're dealing with hairs of inflation here, right? Is the Fed looking for 2.5% CPI, or are they looking for 2.8, or are they looking for 3% or 3.2? These little differences actually matter in the scheme of things. If you see a dollar declining by, let's say, another 3 or 4%, let's say we get to 10% off of the highs, think about the potential for the CPI to start to uptick just enough, which now throws a huge kink in the whole, oh, the Fed can cut 175 basis points like they've been talking about. I mean, again, that's what the market's pricing in. I'm just telling you what the Fed funds futures are telling us. The dot plot is basically, we're talking about 175 basis point cut is what the market is expecting. With a dollar declining, if we do go down here, you're now here. Time highs. Cocoa, chocolate, we're talking about at essentially highs. There's a lot of commodities that are going to be going up. And again, the drop in the dollar is going to help push them up even more. So again, guys, big stuff here. This is a big deal that if the dollar continues, it again is good for the stock market right now, not necessarily good for the economy longer term and potential for the Fed to cut interest rates. All right. Let's go on to another chart here, as again, I want to keep you guys in the loop. The S&P chart continues to be the same. Again, volume this week, anemic. That's just the nature of us between. Unless we get big news, which I don't anticipate, I do think it's worthwhile just paying attention to this. Here we are at resistance. We touch this line again. I do think there's a chance that the S&P could float up and touch the all-time high. The spiders. This is the spiders, just by the way. So this is dividends, obviously, are taken out of this, and that's why it looks like that. But ultimately, that's what I follow. I follow this chart, and there's a lot of resistance on the S&P going into January. All right, so a couple other charts here we have to look at. Let's look at the 10-year yield. The 10-year yield is currently sitting on support. So again, we are currently trading down on the day, but at 3.84%. All right, now the reason why this is important, guys, is that it is technical support. We can see right here, this is a lot of support in here. Now, if you break this level, your next likely area is going to be right down here, right in this vicinity. We're talking about, let's say, 3.75, right in that vicinity. Now, if you look at the RSI is starting to tell us that we are a little oversold. I don't have any indicators just yet on the RSI that we're due for a bounce, although I do think psychologically the market has overpriced in these rate cuts, 175 basis points. I don't think we're going to get that next year. I think we'll get 3, maybe 4, maybe 100 basis points in total, and that's if the economy starts to slow. The Fed will then come to the rescue. But again, 175 basis points is a far reach in my opinion. All right, so a couple other things here, guys, as we go through. I did want to just show the Bitcoin chart real quick. We're going to talk about Bitcoin a little bit more. Again, Bitcoin had a little bit of a drop yesterday. It's bouncing a little bit today. Everyone just waiting for this ETF, guys, spot ETF. You know, the bulls will tell you that, oh, this is going to catapult it over 100,000. I think it'll get a little bit of a pop, maybe a pop, like I said, to 48 to 50, and then it reverses and goes back down. Maybe it doesn't even get to 48 to 50. Again, I said this yesterday in Trading the Close with Tony Valliere, but the key is this, is that I don't know any investor in crypto that's not in Bitcoin on anticipation of this approval. So again, who is left to buy? And you could say BlackRock and all these other players, but honestly, guys, they're smarter than that. Like, again, if you're someone sitting there and being like, oh, I can't wait till, BlackRock comes in and buys all this. It's like, dude, no. Like, you think that they're going to be the ones paying up at $48,000 for this? No, they're not. Absolutely not. They have already hedged themselves. They've already put things into place where they already have deals with this or that. They've already done it. Now, it doesn't mean that adoption might not be a catalyst over time with a spot ETF. But again, that leads me into my other thing, which is I think Coinbase, by the way, is a huge short. A huge short on Coinbase. In fact, let's bring up that chart right now and discuss just a little bit here, all right, as we go through. And the reason why, number one, Coinbase has had an incredible move. Incredible company, don't get me wrong. But think about this, is once you have a spot ETF, and I'm Gareth Soloway, right? And it's like, okay, do I have $1 million in Bitcoin, or do I put $1 million in the ETF where I have FDIC insurance? And where if someone jacks my account and steals my Bitcoin, I'm screwed over here, but I'm not screwed over here. It's a tough one, right? Now, again, you could say, oh, well, Coinbase is going to be the custodian for all of these, right? The custodian, so for Coinbase and for all these ETFs. Dude, this is another thing. The margins on being a custodian for BlackRock are about this tiny compared to what they're charging you and me to make trades on Coinbase, which is like this big. The margins are massively different. All right, so you have to understand these nuances, right? And again, to me, I look at Coinbase and I say in 10 years, it's going to be like E-Trade, Ameritrade, Schwab. It's going to be one of these. And honestly, they're probably going to have to offer free trading because there'll be so much competition once essentially you get enough players in there that have regulation, and obviously the exchanges kind of get bigger and bigger and more exchanges, more people offering. And by the way, I want to point this out too. Do you not think that TD Ameritrade is going to offer crypto? I mean, if they don't already, I would think they offer futures and stuff like that. But heck yeah, they're going to get into the place, which now is going to drive their margins, Coinbase, down even more. So anyways, I digress, guys. I got off on a little tangent there. Speaking of tangents, let's talk about a firm. Affirm is one of my favorite shorts going into 2023. Now, this is a high-risk play, obviously. It could go much, much higher in the near term. But the one thing I do know is the consumer is starting to struggle. Buy now, pay later is seeing a huge jump. That's not a good thing, right? When you see everyone saying, oh, crap, I can't afford that new TV, so let me do buy now and I can pay it later. Hopefully things get better later. Well, listen. Things aren't getting better later. I hate to break it to you guys, but right now you're looking at a scenario where the U.S. debt, I think it just hit $33.9 trillion. You have U.S. debt, you have home prices. Again, they're going to collapse. They are going to drop significantly, contrary to what a lot of people are telling you out there. They will come down, absolutely, because once people start losing their jobs, it's going to come crashing down. People are going to have a hard time paying later now once they lose their jobs. And to me, way too insane move here. This is like a crypto move here, and this will come back in, probably back to like $30 or something in that realm in 2024. All right, couple other charts here. I want to just show you this, guys. This is a chart of Intel. Intel yesterday announced that they were going to build a new chip facility in Israel. That's fine and dandy, but the point is that stock has gone parabolic here. Yesterday, parabolic. I think it's even up pre-market a little bit today. I do want to show you this. There is a small negative divergence starting to build here. This high, it's down to this high, so you have a little decreasing divergence. We don't have a topping signal on this yet, but again, these are the signs I look for with RSI that show you have a high, higher high, high, lower high here on the divergence. And again, that would be called a negative divergence. And what that basically tells me is that once I see a topping signal here, like a topping tail, reversal candle, whatever it is, then that's the signal that it's going to have a bigger fall to it because you have the negative divergence in the RSI. A little bit of education for you guys. All right, let's jump over here, guys, real quick and just talk a little bit about a couple other charts. Natural gas. All right, natural gas, you guys know we've talked about this fairly. You know I had a position or have a position in this. So again, what we could see here is looking at this. This was the level. This is where, again, we were starting to accumulate here, and we bought more here and bought more here. We're actually in the money on this trade now for those of you that are following with verified investing alerts at inthemoneystocks.com based on today's price action. Now, again, what I said to you guys before is you have basically a gap fill right here, which is where we went up to. That's why you pulled back here. What I loved, and this is just getting into the hardcore nature of it, I'm going to stand over here so you guys can see this a little bit better, but if we look at this, right, and I'm going to even zoom in just a little bit more because this is so important educationally. All right, there. Okay, right there. Now we have it good. All right, in fact, I can jump over here. All right, so what we have in this chart, guys, is the fact that as you went up, so this was going to be resistance right here, right? We filled the gap. That was going to be a point of pullback. We pulled back. What I loved is that on this day, you dropped down to here and you reversed. The next day, the bears tried to push it down, and they did, but it didn't close below that low. Then you got a reversal up candle, then another tail, and then another tail. When you see these tails occurring at the lows or near the lows of charts, what it's telling you is that you have weak money pushing it down, and then big money, institutional usually, or just smart money, they're buying it up. They're buying it up. They're buying it up. Every dip they're buying. That is a good bullish sign, technically speaking. Now, granted, we still haven't taken out this level. This is your zone. Basically, 252, a daily close above 252. That gets me excited for another leg up in natural gas. And again, we talked about this earlier, but oil starting to pop up. We have nat gas starting to look at iron ore. I mean, all of these different commodities are starting to uptick a little bit here. And again, with good reason. Interest rates are coming down. There's more money in the system, et cetera, et cetera. That creates inflation. It makes commodities want to rise. All right. On gold, quickly here, guys. Gold, there's not a whole lot going on. Gold continues to attack this level. And again, if I just want to I'm just going to actually erase this line. I want to keep it as simple as possible for you guys. All right, we're going to zoom out here. Okay? So basically, if we zoom out here, we can basically even erase that one. We have gold, which is right continuing to hammer here. So you have your pivot high, your double top, your triple top, your quadruple top, which tried to break out, right? Tried to break out, but it failed. And obviously it came back in, and now we're hammering it again. So today we're literally dollars away. What I think is going to happen is I think you're going to get a daily close above that high of around 2075, 2080. And on that close, it's going to then start to rip higher. And again, I talked yesterday about some of these states that are now starting to talk about classifying gold and silver as a monetary value, as a currency. And again, correctly, some of you guys pointed out that, granted, that doesn't mean that you avoid federal taxes on it, you just avoid local, but it's more the mindset. Think about this. Think about the political atmosphere out there right now. If you just have some of these states doing it, more states are going to follow suit. In fact, wouldn't be surprised if the state I'm in, Florida, starts to follow suit as well. Then you get these politicians in the government starting to say, oh, wow, we like Bitcoin. We also like gold as a currency because the dollar, again, with the U.S. debt. And before you know it, you could have talk about it being literally accepted as a federal global currency again. And when that happens, guys, gold will see $5,000 an ounce. All right. Now, again, maybe I'm wrong. Maybe it doesn't get to be that level. We'll have to see. But I could see the chain. It's a chain reaction system. Always remember that. It has to start somewhere. You get a few of these states to do it. More states do it. More states do it. More politicians pick up on it. They see how popular it is because of the anti kind of printing money and global debt and domestic debt, and before you know it, you have gold just ripping up now as a actual currency or potential currency. Pretty cool stuff. All right. Couple other things, guys, just going back to Bitcoin really quickly here. And again, just looking at Bitcoin. Bitcoin, again, doesn't have a whole lot to talk about today. Just you can see it's a lot of chop here. In essence, the only thing I'm thinking personally, and again, I went into this yesterday in my forecast, is that whether we hit 48 or 50,000, I think the altcoin market, we saw, by the way, after my game plan, and I talked about seeing as much as a 50% correction in the altcoins in the first half of 2024, we did see a pretty big drop in some of those altcoins. In fact, if we look at some of these, I mean, even look at something like a Solana, it's bounced back a little bit, but I mean, these things have so much downside to go. And again, this will piss off a lot of altcoin lovers, which is fine. That's part of the game here. But ultimately, what you have to recognize is on something like Solana, there's something that will want to see a retrace to the scene of the crime, right? Major breakout, overextended move. At some point, this hits 75, which would be a retrace to that scene of the crime. And you can look right here, right? This was a retrace, right? Broke out, retraced, broke out. This is going to have to come back into this zone down here. All right, and you could look at a lot of these other ones that have been pumped. And, it's frustrating with the altcoins, and I'll tell you why, folks, is because a lot of them are scams. Now, Solana's not a scam, and some of these others are not scams. In fact, I like Solana, but it's all about at what price is Solana worthwhile. But you look at INJ here. INJ, look at this move up. We're talking 500, 1,000% moves on a lot of these altcoins. And again, what you have to recognize is that people are being paid to shill these things to you. 7 figures. 7 figures. They're being paid by some of these meme coins, and I'm not necessarily saying it's INJ or any of these other ones. But again, guys, don't be oblivious to this. All right, there's a reason why I was able to see what I saw at 69,000 and call for the correction to 20,000. Now, so far, my 10,000 call didn't pan out. Got to 15. Oh, shucks, I missed it by $5,000 from 69,000. But ultimately, the key is this, is that the same things that were occurring that I saw in 2021 are now in flux, absolutely in altcoins. Not necessarily in Ethereum. I'm not seeing the same thing in Ethereum, and I'm not seeing the same thing in Bitcoin necessarily, but in altcoins, these type of moves, again, are the moves that predate a flush and essentially a run for safety. Now, again, it doesn't mean you don't play the altcoins. If you like playing altcoins, play altcoins, but just be smart about it. I'd much rather miss a pump and dump than get caught up in a pump and dump. And I think that's the key there. All right, so in any case, just something to note there. Now, as we go to the oil chart, we look at the oil chart here, we can see that the head and shoulders, and again, I hope you guys were able to educate and learn on this because this is an amazing tool that I've used so many times in my career to calculate where a head and shoulders target will be. But just to quickly show you guys, again, here's your shoulder, head, and shoulder. Take the highest point to the neckline, that distance, that is what you're going to do from the break point down, and then look at where oil bottomed right there, and we're starting to move up. Now, if oil continues to move up, better be ready for inflation to peek its little ugly head out of the floor, if you will. All right, URA, quickly to look at URA, then I actually want to look at lithium a little bit here, guys. So on URA, which is uranium, uranium's had an amazing move. I actually still think there's more upside here on uranium. Not a whole lot, but just be careful. You're getting towards a double top here. Again, double top right here, and I think we're heading up right up into that, and it makes sense. And I think we even pierced the double top a little bit. You'll see more and more charts that, just like Bitcoin when it topped in 2021, you had the first wave, then the big sell-off. The second wave made a higher high, never confirmed. If you know your confirmation signal, blow you away, guys. In fact, I'll do some sort of educational piece on that for you at some point to really show you how you could see that the breakout above 65 on Bitcoin back in 2021 never confirmed. It told me it was a fake breakout. And again, that enabled me to say, guys, this is a warning sign. Even more so, we are still headed back to 20. All right, you guys have a great rest of your day. Let me flip back. Actually, no, wait, check that. Sorry. One more thing. I did promise I'd go over this lithium chart. Lithium here, guys, on this chart is really quick to go over. We've seen a big drop in lithium. Again, one of the things that I'm seeing here is, number one, it's in a steep downtrend. You can see that, again, you have this trend line here, this trend line right in here. We just did hit support. So again, we are into a little bit of support on the lithium chart. You might get a small bounce, but ultimately, I got to be honest, based on my projections for the economy in 2024, I actually think lithium is probably going to go lower, which again will probably be a culprit of, again, these electric cars. The demand is starting to slow. Part of it is price. Part of it is people just are extended financially. They can't afford it. We're seeing discounts and margin contraction amongst these EV makers and so on and so forth. But again, there'll be a short-term move down. Eventually, you'll see a remove to the upside and a pretty powerful move back up. But I still would be very careful. I'm looking, by the way, at Lithium Americas Corp, symbol LAC on this one. All right, guys, quickly back to center screen here. So again, as always, it's been amazing to join you guys. I have to get to the trading floor as we're about to open the stock market. I need to get over there. But as always, guys, thank you for tuning in. Thank you for the kind words, by the way. You'll notice that I do like your comments on there. I'm reading each and every one of them. So thank you from the bottom of my heart. Also, go follow Verified Investing on YouTube if you don't already, and Verified Investing on Twitter. And on that note, I'll see you guys tomorrow. Take care.
Are you aware that someone could be watching you right now? Consider this. All of your data, your passwords, your entire identity could be exposed at this very moment. The best way to stop this is by using a VPN. NordVPN is more than just protection. It's peace of mind. Their threat protection blocks malware, trackers, and ads, keeping you safe from malicious downloads. Also, no more unwanted sales pitches or spam calls. Your privacy is non-negotiable. Please visit the link in the description and protect your future with NordVPN.